Bitcoin Cash hard fork aftermath. Why did this even happen? This morning, Bitcoin ABC is currently 31 blocks ahead of SV, and most people are declaring Bitcoin ABC the winners. This was powered by Jihan and Roger Ver, who minutes before the hard fork dominated. The hash power went to 52% and have stayed far ahead of the CoinGeek group, which was promoting Bitcoin SV. However, Dr. Craig S. Wright reminds us this morning that this is a marathon and not a sprint. We'll see if they can really outlast Bitmain, but I highly doubt it, and we'll cover why in this video. As we can see, ABC has been maintaining a 52% hash rate, so they're controlling the blockchain. Their price is at 283 pre-trading at Poloniex, while the SV coin is at 105. It appears the action to take at Portfolio Builder, which currently holds between a 10 to 15% position in Bitcoin Cash, depending on your risk setting, is to simply move our Bitcoin Cash coins back to our Nano Ledger S after Bitcoin SV has died off. And so you can see a snapshot of what percentage of our portfolio holds each coin in these two screenshots. And if you haven't downloaded Portfolio Builder to build an index of the total market, highly recommend you do. It'll make sure you have the right amount of capital behind each technology based on trading volume. Now, if Bitcoin Cash SV does not give in and or at some point overtakes Bitcoin Cash ABC, we may end up with either a sidechain of Bitcoin SV or Bitcoin ABC. And if that's the case, we may add it to our portfolio based on its 30-day trading volume. I would suspect that if the SV sidechain splits, that we would be selling most of that technology. Now we do need our coins to be at Poloniex, Coinbase, or Binance to effortlessly get the new free token, which we did earlier this week with a lot of warnings to our members. But at this point, it appears that if there is an extra coin, it will be the SV. And this could become something like Ethereum versus Ethereum Classic scenario, with two surviving technologies serving different morals and governance. And you can see just in the past 24 hours, Ethereum Classic still the 13th, or rather the 17th market cap coin, trading $229 million in the past 24 hours. Now that's a far cry from Ethereum's $2.3 billion. And the price is less than a tenth that of Ethereum's, but they're still alive and well, and longtime investors in Ethereum Classic have had great returns overall. So it's alive, it's well, it's perhaps not dominating and may not last forever, but Ethereum Classic has survived, and perhaps we will see SV continue to hang in there for a lot longer than anyone thinks. My expectation is they will simply take their cult following of clients and go create their own chain, just like Ethereum Classic did. But why did we have to have this dramatic fight in the first place? Well, I suspect it's because of the mining difficulty getting much more difficult this year. Craig Wright, Ayre own a mining pool called CoinGeek, and they sell webinars for CoinGeek, and they have a big business convincing retail newbies to mine Bitcoin Cash. And apparently they did very well with this for quite some time, and they came from big money. Ayre created Bodog and was a billionaire from that. But there is a big elephant in the room. There's one huge problem with their CoinGeek business model. And it's also a problem for big companies like Genesis Mining, maybe for Bitmain, although they're creating the hardware rather than trying to sell mining capacity to newbies, which is what CoinGeek and Genesis Mining have been doing. And we can see that the hash rate, the difficulty level, has gone up 400% just in 2018, while the price of Bitcoin has collapsed. And so this has essentially made Bitcoin mining, as well as Bitcoin Cash mining, not profitable. So they have tons of clients who are probably very upset at this point in time, who cannot afford to mine Bitcoin. And I believe that the mining industry for newbies is likely coming to an end, as sophisticated technology experts in cool temperatures and low-cost electricity areas of the world have key advantages. And here's some tweets. People complaining in general about renting Bitcoin contracts. They're renting these contracts to mine Bitcoin for a year, 2 year, even 5 years out. And now the mining companies are losing money trying to mine, so they're just turning these off, and people are furious. Here's a tweet from Litecoin Pat. Hashflare is paying out $0 on mining contracts because of increased Bitcoin mining difficulty and reduced price of Bitcoin. Genesis Mining not offering contracts to the US residents. Bad day for miners. Personally, I'm done with the mining game. I broke even. This was on June 15th. This is April 19th, 2018. Crypto miner 1980. Beware, Genesis Mining has been taking money and not paying out for months. Disabled features to track your account balance. Daily payout amounts and colossal failures on customer service. Mining difficulty goes down instead of up, yet the payouts are less. SEC to rescue. And here's a couple tweets from 2017. It just goes to show that this mining business is tough. You have to stay on top of the current technologies. And as your hardware becomes obsolete to compete in different areas of mining, you have to be adaptive and find new coins to mine. So these guys are essentially selling you a setup that may do really well right now at this very moment, but it's not going to last for 2 to 5 years. You're going to have to be constantly changing, tweaking, and managing this to profitably mine. And as everybody rushed to buy these machines in 2017, now that the trading volume has reduced, the prices are greatly reduced, the profitability is much reduced, expect a lot of these people to go out of business. And more complaints. This guy got blocked from Genesis Mining and YouTube. There's people just having stopped receiving payments in the past 2 to 3 months. So people are upset, and now they want you to pay extra money to do this maintenance to make your mining profitable again. So you can see tons of people having problems with this, calling them a Ponzi scheme, not getting paid out. Then they came out with Squire mining penny stock. So CoinGeek does seem to be pretty desperate. Perhaps something related to Bitmain's legitimate IPO that's being underway. So they pulled out the ghetto penny stock launch. And to make things even worse for the SV team, Bitcoin Cash ABC is adding second layer protocols to reduce block size, key for mining profits. Ethereum is creating sharding to reduce mining requirements and add new proof of stake technologies that require little or no mining at all. And this is all emerging at once, making mining less and less profitable for newbies. And CoinGeek, Calvin Ayre, and Craig Wright have seen this coming for years and wanted to protect their mining business through Bitcoin SV, which would increase the block size and help guarantee future mining profits, or at least they hoped. For now, it looks like they'll be left behind rather quickly. So this concludes our week-long coverage of Bitcoin Cash hard fork. Look for smaller updates on it in the upcoming weeks as we observe what really plays out here. And if you have not yet signed up for a free 60-day free trial to Portfolio Builder, where our technology powers you to own an index of the total cryptocurrency market. Click the link below in the description box, and we'll get you started right away. Thanks, and have a great weekend.